the HAF has actively worsened our housing crisis.
In order for the Housing Australia Future Fund to make a single dollar, it invests in companies whose business model is dependent upon house prices increasing, housing becoming less affordable. Before a single home is built, the HAF generates returns on its investments. It makes money from investing in the economy. In this respect, it operates similar to our superannuation funds. Therefore, like super, the HAF doesn't invest in a vacuum. The performance of the Australian economy is predicated upon the price of housing continually going up. This is because 60% of bank lending is in residential mortgages. Banks are the biggest shares on the stock exchange and comprise 90% of the financial system. What ends up happening is that the banks will intentionally crowd out or disregard commercial loans in favor of residential loans. By expanding loans into housing, by creating more and more credit, our financial system becomes dependent upon property prices going up and up. This means that strong house price growth, in other words, housing becoming less and less affordable, underpins the profitability and viability of our most basic and fundamental financial institutions, and therefore underpins our economy. As demonstrated by Williams 2009, a greater ability for banks to create credit and lend out into the economy engenders a large structural increase in demand for housing assets.
The HAF's biggest and most lucrative investments are in financial institutions, thereby expanding the supply of credit. In the last financial year, the biggest assets held by the HAF were either in banks, private equity, or asset managers. Essentially, a web of private financial institutions which directly profit from housing prices going up. For the HAF's investments to pay off, obviously, the companies have to be performing well, which in this case means perpetually growing house prices and increasing unaffordability. As found by Giarozzi and Horney 2020, bank stock price rises necessarily causes increases in household and corporate lending.